Syngene IPO, on the Syngene IPO and on other issues that plague the pharmaceutical space. Surya Narayan Patra of Phillip Capital joins us in the studio. Surya, good morning. Thank you very much for joining us. Well, let's start with your view on Syngene itself, though of course I guess the market is a little preoccupied with Lupin and Sun at this point in time, but nevertheless, are you all recommending a buy on that IPO?
Yeah, we are recommending subscribe to the IPO. We believe this is a kind of unique offering for the Indian investors, and particularly the kind of capabilities what Syngene is currently having in the CRO front. That is also unique, considering the fact that they are capable of providing services for NCE development as well as the biological molecule developments. That is the key advantage, key edge for Syngene. That is one, and the track record of the company, if you see, it has been quite strong since last 5-year financial performance. If you see, on the top line front, it has delivered 25% kind of a CAGR. On the earnings front, it is 42% kind of CAGR. So that is what it says, that kind of their strength of the company in terms of executions. And going ahead, so far it's been largely on the CRO side, on the contract research side, and now they are moving into the manufacturing of the novel molecules. That is what is the key advantage, that what will drive the value growth for the company going ahead.
In terms of a price, the price band is 240 to 250. Say in the next 1 year, what kind of upside would you expect?
See, currently from the ongoing business, that is means the CRO contract research business only, we are expecting a 20% kind of a CAGR for next 2 years. And based on that, we feel the continuing business itself can be valued at the current price point what it is currently trading, or they have quoted. And the new manufacturing, the new molecule or the novel molecule manufacturing opportunity what would come on their way, that will be the additional upside what it would be there for the investors.
Okay, let's get to the other stocks that are troubling the pharmaceutical space investors today. Your take on Lupin. What did you make of the numbers, the purchases that they have made since acquisitions? Okay. Is it value for money now, or do you think you will recommend buy at lower levels?
Yeah, that's what we have been maintaining sell call on Lupin since some time, and the key concern has been that kind of weakening US approval pipeline. And see, that is the visible US pipeline seems weaker compared to the kind of last 2 years strongest base. So that is why we are seeing a kind of a moderated growth for the US anyway. And apart from that, the kind of 483 observation what it has been emerged for their Goa plant, which is again an important plant, that also seems to be a kind of a key concern for us. Why? Because there are a couple of key product opportunities were there for future, and that is getting impacted because of this 483 observations what has come. And I think since the management has commented that there would be a couple of procedural issues. Apart from that, they might be required to change the SOPs. So that might require the reinspection by the US FDA also. So which could be a kind of a long-term process and could impact the approval in the near future. So that's why we are of the view that US pipeline is obviously weakening considering all this fact, and that will to some extent is been the kind of a key re-rater in over last 1.5 year period or so. So I think because that is the key strength of the company is getting impacted, so there is a chance of de-rating. So that's why we are seeing a sort of negative call on it. And the acquisition what they have done, we feel as of now it is a kind of a pricey acquisition, though the indication by the management is that possibly in over 3 to 4 year period, the top line will see a kind of a 3x kind of a revenue growth from the current base. But as of now, it would be a kind of a largely debt funded acquisition. And in the FY16, we are believing it would be earning dilutive, and FY17 it would be just neutral kind of implication that it would see. So that's why we are maintaining our sell call on Lupin. Okay. We are of the view that target somewhere like 1540 around levels that we are thinking.
Okay, the other stock that you have a buy on is Dr. Reddy's. It's had a great performance this year.
Correct.
Comes out with numbers this week. What is the expectation?
See, for this quarter, in fact, we are believing something like muted kind of performance only we are anticipating for Dr. Reddy. It's like on the top line front, 12% kind of top line growth, and bottom line implication would be somewhere like 6-7% kind of muted growth only we are anticipating for Dr. Reddy.
All right, we'll have to leave it at that. Thank you very much, Surya, for joining us with your
Thanks.
thoughts on Syngene and on major pharmaceutical stocks. As we wind down on Bazaar, we leave the markets in a troubled spot, you will have to say. It's 1.5 down on the Bank Nifty and over 1% down on the Sensex and the Nifty. Mid-caps as well did see a little bit of stopping of selling, at least as it touched that 1% cut. But at this point in time, all you can say is that the hemorrhage has stopped.
Yeah.
But it's not stopped for good. We do not know yet. Two stocks are in the red, for one in the green, and there is still a lot of selling in plenty of stocks that's happening. Alstom T&D in the last few minutes has taken a bit of a cut. NMDC has taken a huge cut in the last few minutes. Tata Power has done that. FAG Bearings, which actually reported good numbers in the last few minutes, has seen a big cut. Exide, HUL, Nelco, the list goes on. The last few minutes have seen a sharp cut in many of these stocks. So watch out, plenty of trading ideas coming up for you on Traders Only in just a minute.